Welcome everyone to the Kindle Report. It is Thursday night, the final broadcast for the week, and what a week it's been. We did see the markets trying to rally early in the session today and then just fell apart at the end as they have been going on. The title of this video tonight is Full Liquidation Mode, and you're going to see the database is just puking out everything, and I expect that we will see the intermediate database do the same. I'll talk about that more here in just a minute. One thing I got into talking about today in our live trading room, I got kind of on a little rant, and there's we all know that the real estate markets are very, very weak, and mortgages are just non-existent right now, and we're seeing the 2-year print up at 412, 12.6. Now the yields just keep going up. Everybody keeps talking about something that that bonds are getting attractive. No, they aren't. I'll show you something here in a little bit, and I think we're in big trouble here with yields. With this most recent surge is really starting to break things out. We had a whole slew of central banks yesterday come out, and every one of them from the BOE across the board, with the exception of one, the Bank of Japan, the only one to buck the trend. Everybody did a 0.50, and I think it's interesting. The Fed did the 0.75, and then we got everybody else doing 0.5, and I guess it's justified. In Europe, things are much weaker just with everything that's going on there with the Ukrainian war and everything that's being affected there. But one of the things I'm going to go through, just a couple individual stocks I want you to look at, and I want you to see what's really going on in this housing market. It's starting to get very ugly, and some of the mortgage originators are in focus, and I talked about this today, is that around 70+%, I think it might even 80, I meant to look up this number before I came live tonight, of the mortgages are being originated by non-bank entities. So things like Rocket Mortgage and Home Point, there's a whole bunch, a slew of them. And there's a couple of the big ones. I mean, I'm going to show you something here that you would not want to be in the mortgage business right now. And we'll talk a little bit more about that in a minute. But one of the things that continues to happen, and it amazes me actually, is that we continue to get crazy good numbers out of the labor market. So claims were up week over week a little bit. They were up to 213, but the continuing claims have dropped under 1.4, 1.379. And those numbers just keep getting better. It's bizarre what's going on. And I think this is what's got everybody just in this, confused mode. And I think the only things that are clear is that interest rates are going up. The economy is coming apart little by little. And we have a bunch of people trying to, I guess I'll just say it is trying to entice a nuclear war, it appears. It's bizarre. I mean, we're all sitting here as, I guess, the lemmings sitting there waiting to see what they're going to do. I mean, it's absolutely crazy what's going on. And I think that also is affecting sentiment big time. And we talked a bit about, and I'll go through when I talk about gold tonight. Gold still is maintaining itself in spite of the Dow interest rates skyrocketing. How could that be, right? How could gold be holding up? And I think it's this geopolitical situation that we're in, that there's just still a bid there. We'll talk more about that here just shortly. But I'm looking at a couple other things that were out yesterday. The yield curve got more and more inverted. Yesterday, S&P down 0.84, NASDAQ down 1.37, and the Russell down 2.26. And that's the focus. And when I saw the Russell trading down the weakest of the group today, and that had a lot to do with some of the things I'll show you when we get into, I'll wait till the Russell when I show you these stocks. But a lot of smaller, intermediate size and small companies are financial companies. And that's where all the weakness is coming in. Semiconductors was by far one of the weakest groups out there today. Somehow Microsoft caught a bid and a couple others, but not everything goes down every day. But we're definitely seeing this whole situation where the market is just continuing to implode, and sector by sector. You'll see when we go to the database, it looks like we're going to be able to get through the stream tonight pretty quickly, just because of there's really nothing to talk about, right? We had all the news yesterday. There's nothing really going on here. All the central banks are done. We've got a couple minor reports coming out, but nothing's coming out. And we're coming into the final week. So on Sunday night, need to do a really good job of setting up the week next week, because that'll be the final week of the quarter as we come into the end of September, which is hard to believe, right? Months just kind of cruise by in front of us very quickly. So let's go ahead and get into the database. I'll show you all that, and then we'll get into the technicals and should be able to get done fairly quick tonight. So here we go. 2,662 sell signals on the short-term database, only 25 buy signals. We're down to 14.51. I talked to you about last night, there were a couple numbers. 22 was one of them. Yesterday we were up and around 24%, 25. I don't have the numbers right in front of me, but we did have this massive blowout, and I was talking about us getting down to 12, maybe down to 8%, and that's a thing. It's already happened. And just real quick, talk about the intermediate database. The intermediate database is probably going to see a liquidation. I'll just put this over on the screen here. It's at 32.57. I suspect that's going to drop into the 20s as well. So we're definitely seeing the entire thing just come apart here, and there's just nothing to hold the market up. I'm going to go back to the daily just for a second here. There's only one sector. We had two sells for tomorrow on a sector level. We had consumer cyclical X'd out, and so did services sector. Only thing left is energy, and I suspect it's hanging on just by a little bit here. It's starting to get weaker, and that's something I'll go through as well. We're still seeing a lot of interesting gyrations going on in energy and some other things here. So it just looks like, I just have to tell you, I'm not looking forward to this next phase of the markets. Gonna have to, I guess the reason for it, my hope was that maybe with the 20% down that we've been on the S&P, that we would be able to find, maybe get some traction, set this up, and we'd be able to make money. You have to realize that we primarily deal with long-only investment advisors, and when the markets are going down, this is just no fun. Okay, can't make money. You have weird conversations with your clients, and and there's not much you can say other than, hey, we're protecting you. We've got a fair amount of cash. We're being very careful what we own, and that's exactly what you get to do in this kind of environment. You folks that are managing your own money have some advantage being able to do some things out of the box that you can't do when you're in a regulated environment. So, but still, we are getting into treacherous waters here. And I'll just make a comment that, when you get to these kind of phases in the market, you can just get these rip your face off short covering rallies that last for a couple of days, and you get it wrong at the wrong time, they can take a lot of money from you. And it's so I'm just going to continue to tell you folks, be cautious. I know you got SQs or whatever you're doing out there, especially if you're leveraging up, just be really cautious. And we had some conversations today about maybe putting on some things that you like, maybe put covered calls on or doing some spreads on options. Not going to get into that here. I really don't cover that on this channel, but we are going to be, I'm going to get some people involved that we can actually talk a little bit of options in our live trading room, because I think it's going to be one of the strategies that you're going to probably have to be able to deploy going forward. This is just going to be, not going to be, it is the worst market from an investment standpoint that there's been for a while. And I'm just going to rant on for another minute because there's things that are coming up that I talked about earlier today. But my comparison right now, and maybe I said this last night, when I spent 4 hours on the internet today and 4 hours today on the internet. So some of this stuff blends together. But I think where we are, this could be a multi-year crud market. And whether it goes down another 20% or not, maybe the pain is just going to be not being able to make any money. There was free money for so long. Now that's gone. It's just going to be one of these grinding markets. And my comparison was after the two markets, and I'll cover this on Sunday night in more detail, is two market periods to look at would be the dot-com bust, and going from after the first quarter of 2000 all the way to 2003, there was 2 years. In the middle of all that, we had 9/11 to boot, right? So we had just all kinds of negative sentiment for years, and there was no reason. There was earnings compression. There was all kinds of stuff going on. I won't touch on a lot of stuff that was going on in that period. And the other period was, even before my time, was back in 73, 74 into that big decline. That was another multi-year situation. And there's just things are just so screwed up. There's no other way to put it, that it's going to take years to fix this. We knew this was coming at some stage. And I'm anxious to get into the quarterly charts as we come into the final week of September and start talking about the setup. The little bit of profits we had on the quarter are continue to dissipate, so there's not a lot left, let's put it that way. And a little intra-quarter rally went up to 43.27, and that was about it. A little bit more. That's basis the futures. So let's go ahead and go into the technicals. But I think there's just a lot going on here that is going to be plaguing the markets for a while. And we got election coming up, just a whole lot of stuff. My biggest concern, I just go on for a second here. My biggest concern is also that we get in, just not that the political situation isn't already a mess, but let's say the Republicans get in control. I don't know how far they'll push things, but we could be just flip the coin on what was going on with Trump into Biden and just getting attacked and impeached and all the crud. I mean, the guy doesn't even know where he is, right? So the good news is he won't feel very much pain or even understand what's going on. But the bad news is that the rest of us will. And it's just going to be a mess. And who knows, like I said, we still have this thing with Putin and everything hanging out. So we just got a mess on our hands, folks. So hang in there. We're going to do our best as we go through all this to try to find some opportunities, whether it's short or trying to find something to own at some stage. But it's just, like I said, probably the worst time ever. So sorry for the rant. We'll go on and let's get into the technicals. All right, as I look at the S&P, we continued to kind of move lower. As I mentioned S&P was down 0.84, NASDAQ down 1.37, and the Russell down 2.26. We're just continuing down within the grid, which is typical, like I've talked to you about before, in this market grid, it's roughly 12% of the time that we break out of this range that we're in. We look at let me bring up the grid on screen so you can see it here. The R1 is 37.95. We've almost printed that. On the downside, S1 48. We've had a low of 69 so far. All of a sudden, 37.22, S3 36.96. And I talked about this number last night, which is the Fibonacci projection number, which is 37.31. So that is in play today with an S3 move. So we're looking at 37.31 would be fib target 1 on the daily. The next target after that is, we're talking a new low from June here, going down to 35.61 and then 34.56. I'm not even going to touch on the weeklies tonight. No reason. It's not important. I will do all of the longer term stuff on Sunday night, quarterly, monthly, all of that. We'll get into that at that time. But that's really for Friday. That's one of the things you're going to need to be aware of, is just that range. I'm looking probably R1, S2 is a possibility. And that would, like I said, that would trigger a hit on that fib target 1 here in this pattern. That pattern came in, the first time that was generated was on the 19th of September. So we started getting these fib targets here, and there's really no hope here, because what's likely to happen if we close down at S1 or lower tomorrow, which is 37.48, and there is a little bit of a premium here on the futures, so be aware of that. These futures have a bit of a premium over the cash. So somebody was talking about the cash is leading. No, there's just actually a premium in the futures contracts right now. The carry cost that's coming in, that's causing this to look like it is. But the point is, we've got PPM1 actually at a minus 0.8 now, minus 0.47, and PPM3 is actually about to go into trend mode as well. It's at 0.19. So we just got full-blown downside at this time, and any rallies will be quickly met with more selling. There's just, like I said, nothing really to get bullish about here at all. Let's go ahead and take a look at the NASDAQ. NASDAQ, same looking configuration. Only difference is the weakness. It's even weaker than the S&P. We're down 0.93, 0.65, and 0.29. So all three are below 0.25 or lower, minus. These are negative numbers. So that all three of the trend levels are in trend mode to the downside. So, like I said, the fib target on the NASDAQ is 11,167. So that's your first target to watch out for, and that's really the only thing that you should be looking for, at least a target there. Maybe we can find some kind of magical bounce there, but there's really nothing there. These Fibonacci numbers, for all practical purposes, they're just numbers, okay? And I've said this for a lot of years, is the market will tell you where the numbers actually are, meaning this is that if you get a big reversal, outside reversal, some kind of other confirmation that something happened at a price level, that's when you know that these fib numbers are working. If you get basically the dead cat bounce, you don't get much off of off of a bounce off of these numbers, then they're probably going to continue down. Especially the beauty is with the PPMs, if you have the indicators, you can see these things actually accelerating. You put this on maybe an hourly graph or something like that, and you're going to get a little finer tuned look. Maybe you'll have a better shot at picking up a reversal pattern, but not sure why it would come in other than maybe there's some short covering. Just know also, as we come into next week, while I'm sitting here with looking at the NASDAQ, is that next week we're going to be getting into that quarterly rebalancing mode. So there's going to be some cross currents in there as well. I'll do my best to try to figure that out. That's part of what I'll be working on this weekend, just trying to see what the setup is on the for the week as we come into this end of the quarter. And so it's going to be tricky for sure, but we'll set it up the best we can on Sunday night. So next we'll look at Russell. Russell has definitely getting even weaker, minus 0.9, 0.64 on PPM2 and 0.22. So it's just about like, it actually is mimicking more of the weakness in the NASDAQ. And we are getting a little bit of volatility expansion here, meaning that the market grid is starting to blow up a little bit. Let me just bring this up so you can see this just a touch. You'll see that we're starting to get that to blow up. S1, 1713, low 24 so far. So I'm looking kind of S2, R1 on the downside. It looks like we're going to follow through. I'm not sure anyone's going to want to be long this stuff. Anything's, like I said, as we come into this final week, when will the rebalancing start? Will it be a positive? What's going to be the scenario that plays out? Like I said, hopefully we'll be able to figure out something, maybe off of Friday's action or somewhere like that, that we'll be able to get a little better feel for that. All right, into the interest rates. A lot here. Before I do that, I already put it up there. I promised you something. I just want to show you when I did the Russell. I just remember it's kind of off script, but I want to show you something here. And these two charts here, the left-hand side is Finance Company of America, Finance of America companies, which. And then on the right-hand side is Rocket. And look at, these are monthly charts, but you can see I've got the cursor on 21 and it is straight down. And this carnage actually started, the carnage in the mortgage market has been around. We've seen these shifts happening in the mortgage market. There's been still some hot markets, but they're starting to cool very fast. Inventory builds. I think one of the things I didn't go in depth with, which I'll talk about next here in the interest rates, but I think I kind of identified something in the live room today that I'll share with you tonight, that I think there's some really big numbers coming out in the mortgage market and in interest rates in general. And it's starting to get at that point where things will start to accelerate. But this ties together. So this is probably a good point to bring this in, because this is really interest rate related, but it's also Russell, because a lot of these kind of companies are what's in the Russell. And so let's go ahead and go into the interest rates, and I'll show you exactly what I'm talking about there. So we did, by the way, get an RXT sell signal. And let me clarify that, because there seems to be, I talk about these. It doesn't mean it's a sell signal, but it just means we go sideways for a day or two. Maybe a bias to the downside. Sometimes it will actually be the top of a sequence. You never know until they happen. But it definitely suggests we're going to go sideways. But if we look at sideways, right now, 368 is S1 for tomorrow. 364 is S2. And, we went out yesterday at, it's a crazy number, we're going to call it 371. And I'm going to bring up the weekly chart because that's that number I've been talking about. And we still have, from a Fibonacci standpoint, we still have a Fib target at 378. I've been talking about that all week. And look at the acceleration here on the weekly. I mean, this is pretty insane here. And what I'm going to suggest here, I'm going to draw in something here fairly quick, because this is what, when we were in the live room today, this was kind of coming up here, where this pattern that we're in here, this is potentially, I'm just doing a big swing. This is potentially a big swing like this that's about to unfold. And we're looking at 4.5%, 5.5% on the 10-year. That's going to throw mortgage rates well into 6.5%, 7%. This is, and look at these PPMs here. I'll just draw some arrows on them. All of these, I've been talking about this thing right here. I'm going to draw in a couple things, but this 200, this is weekly. 200-week moving average is starting to turn up. And what that's telling us, when that starts to rise, then we're looking at all of these angle of attack. This is just in this trajectory for yields just to continue up. And the PPMs are at the moment, the PPMs are accelerating. They're not indicating a top. So a lot of folks are talking about the bond market starting to look attractive. No, it's not. And I've been talking about this for a number of years, and I should go on an old report I did, and I should go look it up. I will over the weekend, as it was even 2015, 2016. I was talking about some of the potential debt crisis situations that happened. I get that was 5-7 years ago, but this thing just has been able to extend itself more than anyone has ever imagined that it could. And so we're getting at the phase, and we're starting to see some auctions, treasury auctions, that aren't going very well. The coverage isn't as good as it was. Usually it's 3-to-1 plus. The tail is 1 or 2 basis points. We are, and I've said this, like I said, for probably 7 years, but we're closer now than ever to, we're one really bad auction away from a disaster. So what happens, I'm going to throw out, and this is not fear mongering, it's thinking ahead. And that's something we talk about in the live room all the time, is anticipating something before it happens. And what if this is right? Maybe even if there's something even bigger, what I have on the screen here, and that what happens is there is a bad auction, and then the bond vigilantes and other folks start to go, wait a minute, is the U.S. going to be able to finance their debt? Because that's been the thing, right? We've got the dollar world currency status. We've got all these things working for us, and that's what's allowed them to get away with this robbery and this financing of this debt like this. And what if that party ends? What happens? And you could see some really crazy rates. You have to remember, I've been through the battles of back in the day, and going back to 1979 through 81, when saw Fed funds actually at 16.5, and then they had on the discount window, they put a 4% penalty on there. So if you went and borrowed money too often from the discount window and you're trying to square your books up on the bank, they charge you an extra 4% penalty. They were trying to, it was crazy. This is Paul Volcker days. And then something else they did was they changed the reserve requirements on the banks, and that just squeezed them. That was the spike up to roughly 21% for a moment. It didn't, and that was with these penalties that I'm talking about. So when, I'm not proposing that's going to happen, but if they start to lose control, I mentioned yesterday and talking about Fed and the live stream is the Fed has no clue where rates are going to be a year from now. The dot plots are a joke. Last year, the dot plots looking out at this same 1 year out, that nobody had any interest rates over 1%. Not one Fed member at all. So let's face it, these guys don't have a clue. And market forces, for a long time, they got away with the tail wagging the dog. And now I've talked about this off and on, kind of on a little rant here, but I think it's worth discussing, is we're now back to the dog wagging the tail. So the market is controlling what's going on and what the Fed's going to do. So when Powell is talking about being, driven by the data is the market, and the markets they're telling them what's going on with these rates. Like basically the market's saying with the 2-year printing up to 4.12, why didn't you just move the Fed funds to 4% yesterday? Excuse me. That's exactly what they should have done. And the result of that is the markets are going, okay, we know where they're supposed to be. The markets are going there. And like I said, I'm kind of setting up a scenario where things get a little bit out of control. It comes to maybe a potential, and it doesn't have to happen, by the way. The way markets work, they only have to perceive that will happen, and the markets will go to crazy spikes and all kinds of different configurations just on the basis that the market sentiment gets so negative that everybody's worried about the Fed or the Treasury not being able to finance the U.S. debt. And I'm not saying that that's going to happen, but it starts to feel like that, especially if these rates go higher. I mean, we're looking, I think, at these rates where we are right now, just a touch over. We're looking at $1 trillion a year just to pay the interest. So all of these scenarios, folks, I've been around a long time and been talking about these things for a while. Just happened to come up tonight. I said we're going to get done quick. Here I am going off on this, but this is one of those things where if these scenarios start to happen, then this is going to go on. And so there is probably like no other time. There's nowhere to hide right now. I talked about investment advisors that are doing 60-40. You got bonds going down, you got stocks going down. They're not doing well. And for the first time, I think, and I've dealt with this community for a long time, for the first time, the 60-40 guys are getting squeezed to the point where they want to get in some cash. Because normally, they just do a small amount of cash. They're starting to wanting to go to cash. When the bond markets top out, when those 60-40 guys start to actually go into cash and actually sell bonds, then that's the capitulation point. Sorry to get off on that. I know I have our investment advisors and plenty that watch this broadcast, but this is probably one of the more important things to pay attention to right now. So I think I'm done. Let's go ahead and get into, we got crude, gold, and Bitcoin to cover, and let's go ahead and get there. All right, so crude oil, we're trading 83.29, down a little bit. This is kind of a broken record story here. And the broken record is crude is likely to stay between around 82. We printed down 2 weeks ago, we printed down to 80.75. We should continue to remain in this area, but we have an issue of a very strong down ppm 1, which is 1.15, and we did see, and I talked about this a couple of weeks ago, this happened this week where the 10 period has crossed over through the 40, and typically we should get some stability here. We should hold this 80 level max, but I'm pricing in an 82.92 range right now, and we're starting to see a little bit of movement on gas, on unleaded gas, and some other elements out there. And we were looking at nat gas has rolled over big. So the whole scenario of how expensive it's going to be this winter for folks in Europe, I think, as I've said before, there's people out there trying to fix this issue, whether they fixed it or not, or whether they're going to control consumption or whatever happens, then it looks like even nat gas, I won't bring it up tonight, but I mean, we could do, maybe that's what I need to do, is just do a full spectrum of everything and do a long stream and just focus and get that organized. That might be worth doing. But the bottom line is the crude is still in this upslope. And real quick, I'm gonna bring up the monthly graph here for a second. And we still have this upward sloping 10 period moving average here on the monthly, and the ppms are 0.34, so that number is at 88.98. We'll call it 89. So I still see, as we come into month of October, that we are going to want to hover right around there. The 200-month average is 88.42, so there's some attraction there to the markets from that standpoint of going up. And the bottom line is the big major support is down at 69. If you look at the market grid here, 80.14 was S2. That's exactly pretty much where we went. We went to 80.75. So we're staying within the grid, within the expectations. So the market grid is an estimation of volatility on a bar by bar basis. So you can run it on a 1 minute or a monthly chart or a weekly, and they give you some really good estimations of where markets are likely to stabilize. And that's why we go through that every night. And I've been using that technique was developed way back in the early 90s, actually, around I believe it was 1990 or something of that. Actually, it was 1989 when that process was created, and it was created for hedging firms that I was dealing with at the time, to give them a best point to buy or sell in a day, whether they're sell size hedge or buy hedge. And same thing, we have the same issue as traders. Whereas if I like a market, where do I want to buy it at? I want to try to buy it at the best price. So that's what the market grid does. And those of you who have the indicators know how effective they are. And I have a new enhancement coming out. Hopefully by Monday, there'll be some really cool stuff where you're going to be able to display the daily values on an intraday chart and do some really cool stuff, so you can actually see the trading values intraday. So if you haven't got the indicators, the link is right here. Check those out. But the entire oil complex is been under pressure for, what will go for the last 3 months. And I think we're finally getting to that point of where things are going to balance out here. So, but that's my best estimation in this range. We're calling 82.92 in that market. Next, we'll take a look at gold. This is what I was talking about earlier in the opening comments, and we're looking at a couple things. This is weekly. 1620 is a fib target 1. We've not been able to get down there. We continue to hover down at the lower end of the range the last 3 weeks. If we look at the market grid, the low's been 61 for this week. S2 is 1653, so basically an S2 on the upside, almost exact print. R1 was 1697.90. We printed 1696.90, so $1 off on that. So it's staying within those ranges. The weekly ranges are usually very good from estimating that range. It will be interesting because PPM1 is still negative but turning up. And if we stay stable coming into next week, we could start to see some upward acceleration in PPM 2 and 3. And that's going to be what I'm watching for here. It's hard to imagine, as I said earlier, that gold's going to do anything with interest rates going up like they are. It's got to be geopolitical. The bid has to be based on that, fear-based trade. But the logic trade says we should be in the 1500 handle. We should not be anywhere near where we are. But it's holding here, and I think folks are putting a bet there just for the whole gold safety situation. So, but anyway, this is the setup looks pretty interesting. I'm looking forward, and we come into the end of the month. The monthly charts don't look very good. They're still under a lot of pressure. So just the weekly charts, but it starts there. So anytime you're looking at a chart, you're going to see a daily lead to weekly, weekly lead to monthly kind of turning point. And maybe we're getting that with these PPMs here. We'll have to just continue to watch for the next several weeks. We're probably 3-4 weeks of stability to get that to go. And like I said, if we keep seeing these rates punch through, there's going to be, I think, a breaking point here. But I'm paying attention to these PPMs on an intermediate basis. Okay, final market we'll look at is Bitcoin. Another market that probably shouldn't be where it is, defying gravity. We got down to the 18,691. I'm just last week. This is weekly. This week we got down to 18,188. So we kind of penetrated through that 18,635, right in that range. We traded down to the extreme. What's interesting here, folks, is that the PPMs are stabilizing here. It looks like we're getting big acceleration. Now, this chart doesn't change or update until after on Sunday evening at midnight on Eastern time on Sunday. So, but still trying to hang in there. And we pressed the lows and not being able to follow through. I'm going to bring up the daily chart just for a second here to finish off. And we do have some downward fib targets that have been around for about 4 days now, and they're projecting 16,112, 13,572, and 12,013. So if anything goes wrong and we get maybe a big surge, even bigger surge in the treasuries, or some of this scenario that I had that I'm just suggesting is something to watch out for, then that is really that would crush this market for sure. But even on a daily basis, there's some stability in this lack of trend. We'll just say it's stable. It's not really trending up or down. It's actually a slight downtrend, but it just keeps holding these key levels. So if you're in there, maybe you're hodling anyway, so it doesn't matter. But if you're trading it, I'd be very cautious. But the way it's trading, it looks a lot better than it does worse from the standpoint of how the patterns are unfolding here. Okay, folks, that's going to do it for this week. And what a week it was. I'm looking forward to Sunday night. And hopefully I'm going to have some new things to show you on Sunday night that are going to be helpful for the community. So anyway, folks, thanks for watching. Thanks for being part of the community. I mean, I think yesterday I had, and I think 24 hours, I mean, there was a ton of views just, on all the videos I did. And even my 3-hour video got, over 5,000 views. So that's pretty crazy. So anyway, appreciate it. And thanks for being part of this community. And we'll see you on Sunday night. Have a good day trading tomorrow. As always, like I said, be careful with those triple leverage stuff. It can get scary really quick. Have a great evening. Talk to you on Sunday night.